Hello, you're welcome to this part of our training and presentation. Today I'll be guiding us through these areas that has to do with technical analysis. We'll be discussing on these five key areas: the market formation, support and resistance, trend line, pullback, and retracement. As Forex traders, technical analysis is the most important tool that is needed in order to trade the market profitably. You need to have a good knowledge of support and resistance, the market formation, the trend line, pullback, and retracement. So you know at what point are you to enter or to exit the market. So I'd like you to pay rapt attention to these key areas that is going to be discussed in this presentation. And feel free to ask questions. Please employ everyone to take this training seriously. Forex is huge. Forex is massive. It has a whole lot of opportunities for us to make money. But we need to get this knowledge that is needed for us to make money that we need from the market. So I'd like us to go to a chart now and see how we can use it to incorporate what we are discussing about. This is a chart, an MT4 chart window. Before we go further, I would like to explain some brief things about the candlesticks. I gave us an article the other time that discussed about candlestick, the candlestick made easy article. So please take time to read it over and over again because there are some candle formations that are very important in making good trading decision. So that article covers all you need to know about candlesticks. But I'd like to give a brief intro to candlesticks. Now from this chart, we see the bullish candlesticks. The blue one, the green candlestick is the bullish one that represents buyers in the market, and the red one is the bearish candlestick, or the red one that represents the sellers in the market. Now the candlestick has a body from this top to this bottom here consists of the body of the candle. The bigger the body of a candle, the more details it tells us. It tells us about volume and it also tells us about momentum of buyers or sellers in the market. The candle has a closing price and the opening price. So we see that from this point, this candle opened and and buyers were able to take price up until it closed at this point. This is where it's closed. That's why we find closing price here. Now, this is the highest price buyers took the price to. This is the highest that price got to. And below, we find the lowest level or lowest price that buyers took, were able to, the buyers got to, and they took the price up. Now, this other part also shows us the bearish candlestick or the candlestick that represents sellers in the market. We see that it opened here, which is opposite the 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 opening price, the opposite direction of the seller, the buyers in the market. We notice that it opened here and closed here, whereas the buyers candle opened below and closed above, whereas this sellers candle opened above and closed below the body. Now, below we see the lowest price that the price got to, and above we see the highest price the price got to. So we need to understand how candlestick work before we can go further to talk about candle support and resistance, because when you are seeing candles in a particular zone in the market, you should be able to understand what is about to happen. Now let's go back to our chart. We want to talk about some key items. We want to first start with market formation. Market formation. How does the forex market work? Now, if you notice this formation of the market, you notice that the market moves in zigzags. The market moves in zigzags, meaning that it does not move in straight line. What do I mean? We notice that price went up, market came down a bit here, it went up again, came down a bit here, went up again, came down a bit here, and it went up. And it also came down a bit here. Went up. And came down a bit here. Now this is how the forex market moves. It moves in zigzag. So as you start trading, you don't expect markets, if you buy, it will continue to buy indefinitely. No, the market does not move like that. It moves in zigzag. It does not move in a one-way direction or in. Now, this is exactly what we are talking about. Now, we can predict what could happen in the markets from one point to start going low. And when it starts going low, it's not as if it will go low immediately. To go up a bit, then go low again, then go up a bit, then go up, go low again. Now this is how the forex market moves. It moves in zigzags. It does not move in a straight manner. Now the reason why it doesn't move in a straight manner is because of what is called price action. Price action has to do with the struggle between the buyers and the sellers. In the forex market, there's always a constant battle between buyers and sellers in the market. If you notice here, the market started making higher highs. This high, this high, this high is higher than this is higher than this is higher than this. So it was making higher highs. And this is also higher than this. Or if you want to look at the chart directly, you see that this is higher than this. So it shows that the price is going up. Now, when the market is going in higher highs like this, it's telling us something, that it has an uptrend. It is going in an uptrend, meaning that the market is bullish, or buyers, there are more buyers in the market. That currency is very strong, that there are more buyers in the market than sellers. Then when the market is going down, it will be making lower lows. This low will be lower than this low. This low will become lower than this low. This low is lower than this low is lower than this. This one becomes lower than this. So it's making lower lows, whereas in an uptrend, it's making higher highs. This high is higher than this. This high is higher than this. This high is higher than this. But when it starts going down, this this low is lower than this. This low will be lower than this. This low will also be lower than this. is how the forex market works. It does not go in a straight line. It works in a symmetrical pattern. It works in zigzag pattern. Now we talked about some key items that has to do with the market formation. Now let's talk about the trend of the market. How do we know the trend? As a forex trader, the most important thing we need to know is the trend line. There's a saying that the trend is your friend, meaning that you need to trade in line with the trend that the market is giving you. How do we know the trend? The trend of a market is usually known on a higher time frame. The higher a time frame, the higher the information it tells us. A time frame can be illustrated with relationship with someone. The longer you've known somebody, the more you understand that person, the more information you have about that person. So the information you get on a daily time frame is not the same you get on a 4 hour time frame. It's not the same information you get in a 1 hour time frame, 15 minutes or 30 minutes time frame. So in order to know the trend of the market, you start from higher time frames like the daily, the weekly, the monthly. But in this instance, we are going to use the daily time frame to know the trend of the market. So to draw the trend of a market, you start from a lower level to a higher level depending on structure of the market. We can see that the prices here are going up. In order to know where this trend started, we need to start from where it's a point at which the price went up below the lowest low. We notice from this zone that this one was higher than this zone. So from this point, we see that the market started going up. So we are going to draw our trend line from here. We are going to connect it to the edges or the wick of the other candles that form as time went on. Now, in this instance now, we notice something. Notice that this is an uptrend. The market has been in an uptrend for a while. We notice that it has been trending up. Now let's connect it. So this one now tells me now, this information tells me now that this is an uptrend. The market is going up. So in this instance now, I need to know that there is more buyers in the market than sellers in the market. So that is the trend line. As time goes on, you are going to understand more concerning what trend line is and how you can use it to make your trading decision. We want to talk about another key important aspect, which is support and resistance. We've talked about the market's formation. We've talked about trend line. Trend line simply means the direction of the market. Like we can see here that the market is going up. And I said we can know our trend line on a higher time frame. On a higher time frame, we need to understand what the market is talking about. Now let's go to the key aspect that has to do with support and resistance. If you notice that there's a difference between this chart and this chart. In this chart, I've been able to look at the key areas in the market. And from here now, I'm able to see what is happening and what is likely going to happen in this market. Now, what is support and resistance? Let's start with resistance. Resistance means the highest level that a price got to before sellers took price down. If we look at these areas that are labeled resistance, we notice that price went up and sellers came in and took price down, and it started, and sellers entered and started pushing price down Now, we notice that sellers entered to push price down in the resistance area. So, put simply, your resistance is that zone in which price got to, and there's force in that area and it has to go down. This is the area in which sellers are able to push price down and they are able to enter the market. On the other hand, support has to do with the lowest level that price got to before buyers entered and pushed price up. The lowest level that price got to and buyers pushed price up. So support and resistance are simply zones. When I say they are zones, it means that it is not as if price cannot go beyond those zones or those areas. They are simply areas in which buyers and sellers always look out for in the market. Buyers and sellers always look out for support and resistance zones in the market. Now, if we take a look at this example of this support and resistance on this top, we see that at this point, the price came all the way up here and sellers try to push the price up. In the adjacent position or the opposite direction, we also noticed that the same thing happened. Sellers looked at the previous resistance level, the previous area that they tried to push price down, and they also tried to do it the same time again. So you see that it happened here and it also happened here. There was a resistance here and there was also resistance in this zone. So resistance is the price or the level at which sellers are able to push price down, the highest point that price got to before sellers took price down. The opposite is the support. Support is the lowest level that price got to before buyers were able to take price up. So as Forex traders, there's a slogan that says that you buy from support and you sell from resistance. So you see these key areas written resistance, resistance. These are areas that Forex traders always look out for. You look at resistance level in order for you to be able to make your trading decision. See resistance here, price got to this area and sellers pushed the price all the way down here and it found support here. This is the level at which buyers enter the market again and pushed price up. So this is exactly how resistance and support works. So once again, remember that resistance are simply support and resistance are simply zones. When you start trading, you understand most times there is a breakout or price usually goes beyond a resistance level or a support or below a support level. But most times traders often look at those zones, previous support and resistance in order to make their trading decision. Now, this is where a good knowledge of candlesticks come in. When you see a particular candlestick form at a key resistance or support zone, we know we know that something is likely to happen. Now, in this zone, we see a very strong, long sell candle, a bearish candle form in this resistance zone. What does this show? It shows that the sellers are about to enter the market. And what happened? This is exactly what happened. Sellers entered the market and took the price all the way down to this point before buyers took it down again. Most times, support often become resistance. How do I mean? Support, previous support usually become resistance in the Forex market. Now, at this point, this was the resistance level. This was the resistance level. We saw that it broke beyond that zone. Now, that particular resistance now has now become support in a subsequent time, buyers and sellers are going to look at these zones when making decision in their trading. So it is very important to have a good knowledge of support and resistance. As time goes on, you are going to understand better what support and resistance is all about. But put simply, resistance is the highest price that that price got to before sellers were able to take price down in the market. While support is the lowest price that the market got to before buyers were able to take price all the way up back. So this is exactly how support and resistance work. We also have our trend line here. I took time to explain what trend line is. Trend line has to do with the direction of the market. We see from here, from this low point, the market traded up. It started making higher highs. This high is higher than this high. This high is higher than this high. This high is higher than this high, and so on. Very soon the market will start making lower lows and lower lows. So when you're able to understand the trend of the market, you are able to trade in the direction of the trend, so you don't make a wrong decision in your trading. The next part we want to talk about is pullbacks and retracement. Pullback simply refers to how support turns to resistance and how resistance turns to support. How do I mean? From this point, we notice something. From this point here, we notice that the market started selling. And what happened? There was a pullback. Sellers entered and took the price down here. So in this instance, we call this a pullback. This particular zone here, from here down to this area that sellers took the price down, is a pullback. This is how resistance turned to support. Now, in this area now, we notice that support became resistance, meaning that the buyers were able to take price all the way back up. From here now to this place, we notice how price went all the way back up. This is a retracement. Retracement means a correction of the market, meaning that the market went in the direction it was supposed to go. Pullback is just a drawback, taking the market back against the trend it was supposed to go. Normally, it's supposed to be an uptrend, but we noticed that sellers took the price down here and caused a pullback, while the market later retraced and continued to go in the direction it was supposed to go. So that is just basically how pullbacks and retracement work. Pullbacks are actually how support turned to resistance and how resistance turned to support. If we look at the chart very well, you notice how this happened. There's a pullback here. The market pulled back. Sellers entered, took the price down. There was a retracement here. Boom. It went up. It went back. It went back to the direction it was supposed to go. So this is exactly what pullbacks and retracement mean. So when we understand all these as forex traders, it helps us to make informed decisions in the market. So I hope I'm able to answer or been able to make some points with this training. I look forward to your questions at the end of this to be able to understand, to ascertain the level at which you understood all what was discussed. But before we go again, let me take a brief recap. We said that the market moves in zigzags. The market does not move in a straight direction. It moves in zigzags. We also said that the trend line tells us the direction of the market. If it in an uptrend, it means that the market is buying. There are more buyers in the market than sellers. this is a typical example of an uptrend. If you look at this arrow, it's pointing up, meaning that the market is in an uptrend. Now, we also talked about support and resistance. Now, I said that resistance is the highest price or level that price got to before sellers took price down, while support is the lowest level that price got to, the level that price got to before buyers took price down. Now, we talked about pullbacks and retracement. Pullback has to do with how support or resistance became support and support became resistance, meaning that it shows the level at which sellers interrupted the activities of buyers in the market, and how sellers enter the market. And retracement refers to how buyers are able to regain strength and continue in their normal direction. So I was able to explain pullbacks and retracement with this chart. I look forward to your questions and answers in our forum, and I wish you all the best as you continue in this training. Thank you.